Hello everyone, welcome into the channel. My name is Brent with Investing on the Go. Today we're going to be covering the January budget week 1 as well as why I sold SPYI and QQQI for a tax loss. We are going into 2026 with a bang, and I'm hoping to kind of get these down on a weekly basis to kind of cover some of the changes that are happening in the market with the portfolio and budget as well. If you guys have any specific questions, please go ahead and get them dropped down in the comment section down below. And we also have a completely free Discord server. The link is down in the pinned comment. Now, with that said, I do appreciate everyone tuning in. Be sure to go down below, smash that subscribe and smash that thumbs up. And let's go ahead and get into the video. So really quickly, if you guys are not familiar with the whole process right now, we are currently living out of our brokerage and have dividends, miscellaneous income covering all of our daily expenses and bills, paying out our mortgage and car payments on a month-to-month basis, and any excess gets reinvested into the brokerage account, buying up more appreciating ETFs that have high yield, no NAV erosion. So keep that in mind. Now, starting off January 2026, we went ahead and continued to pay down that credit card. So I went ahead and paid $800 from an external account from my other businesses. They kind of paid to me, and that way we just kind of paid ourselves $800 from the business, paying down that credit card, an additional $2,561.96 from our brokerage account, while still covering our mortgage and other payments as well going into January 2026. I always like to pay down the credit card balance down to zero at the start because then we start fresh. Everything is fresh. We had the SPYI, the BTCI, the QQQI all paying out dividends this month. We had miscellaneous income and SPACs from cash that was held in the account periodically throughout the month of December 2025. Now, we do have some pending transactions of $287.79. So when it comes to the budget, I always like to put everything into my transaction log. And so far for the very first week of January 2026, we have a expense of $287.79. Now, January, I'm very much looking to tighten down the budget very much smaller than in the past. This is due to a few things which we'll be covering with the tax loss harvesting in our updated current plan going into January 2026. So as it happened, we had our utilities, gas, these are fixed. I can't change our fixed expenses. I pay $81 a month in gas, $76.53 in sewer. There's going to be $649.35 of fixed expenses. There are some changes going forward. I plan to be swapping my internet over from the current 125 provider down to $50, where I actually get nearly double the internet speed and upload. So that'll be a positive thing. Along with my veteran discount, I'll get like a $50 gig up and down, which when I switch providers here within the next week. And I'm doing some other stuff on my business, but I'll cover that in a separate video going into 2026. So groceries, we did really good this week. I just went shopping today with my son. We went through Costco, kind of choosing what we're going to be buying better this week. Our plan is to bring down our groceries a substantial amount. We spent quite a bit in the last week. We still had 2 extra ground beef, some chicken breasts that we went ahead and froze and used them for meals going into this week. So I didn't have to buy as much meat. And we're going down with some lentils to make some soup. So we're kind of shortened our budget going into this week. Expected fuel dining out is still there just to kind of keep it in our budget, but dining out this month probably not going to be a bigger plan with the kids not being at home and us running around as much as we did during winter break. So this will probably get trimmed back a bit. Pet care got bumped up. Cat likes to eat, so he's looking to eat about $120 worth of food, so that's fine. Our mortgage and auto loan, that already got drawn out in December 31st, so I counted that towards my December budget. But, as we get to the end of January, the mortgage will get pulled, and that'll kind of roll into this budget. So right now, everything is as it seems, and going forward, I'm looking to spend mostly just kind of keep it really thin on the groceries. And plus, my son is not getting his tooth pulled out. So our dental costs will come down quite a bit as well, because that was nearly $500 last week as well. Okay, So that's all our debt paydowns as far as going into this week. Everything is reset to zero with some pending transactions, but that's very much controlled. Now, talking about the tax loss harvest while selling SPYI and QQQI. So December 30th, the market broke through I went ahead and took some tax loss harvest, and I'll say that. So December 30th took place. I went ahead and sold out of SPYI, QQQI. So we sold SPY at 52.85, 2,885 shares, and I sold QQQI at 54.30. That was 3,083 shares. So this is a substantial amount. This was due to the market kind of breaking down. It had a very hard time, low volume, and then it hit some resistance and couldn't break above that resistance point. Went ahead and liquidated at these prices here, 52.85 and 54.30. The current prices of SPYI and QQQI are pulled from the Google Finance, and the difference there between where we sold and locked in $319 and $319,879 versus where it's currently trading at, where we'd have $317,000 invested in these two funds. So we were able to create a buffer there of $2,414.92. Now, going into Friday, we didn't know whether the market would hold or not hold. While looking at the market, the S&P 500 refilled the gap back on what was it? Between the 19th and the 22nd. There was a gap up that took place here. On Friday intraday, we came down, touched, and refilled the gap. That was positive. This created some support here. Now we're looking to begin bouncing back up, but I wanted to make sure that this is going to hold the support, potentially retest here once again midday this week, going into Monday. And if we broke down, we would come back and retest and fill this gap that took place between the 17th and the 18th of December 2025. That doesn't seem to be taking place any longer. So going into Monday, the updated plan is going to be our current plan. Oh, actually, it kind of goes into here. So I wanted to take the tax loss on SPYI and QQQI, but directly begin to invest right away with being able to take the tax loss, right? So I went ahead and began to use Gemini here, and I wanted to see if I could buy iSpy and IQQQQ along with IAUI to take that tax loss harvest between SPYI and QQQI. And yes, I can take the tax loophole. So it says right here, you have one of the most powerful loopholes in the tax code for income investors. You can absolutely use iSpy and IQ and IAUI to tax loss harvest your SPYI and QQQI losses, even though they track the same underlying markets. So the IRS wash sale rule says you cannot claim a loss if you buy substantially identical securities within 30 days. So I sold mine on December 30th. I have to wait till January 30th, 2026 in order to sell out of these and buy back into to prevent the wash sale. So the reason that these are substantially different is because the SPYI and QQQI are NEO's investments, so they're NEO's issuer. Their strategy are monthly laddered options. Their expense ratio is 0.68. And over on the ProShares, the iSpy and IQQQ, these are ProShares ETFs. They sell daily out of the money options. Their expense ratio is 0.55, and they both have different CUSIP numbers. So they're completely different in terms of the IRS verdict. Different. So yes, I can go ahead and transition from SPYI into QQQI. Now, I don't want to take a whole lot of time here, but I do want to go ahead and showcase these percentage-wise here and how similar but different they are in performance. So here, the NEOs is in purple and the orange. So purple, we have the NEOS SPYI at 2.65% appreciation over the last year, just in price, not total return. The NEOS QQQI is at 1.51, and then we have the ProShares in blue and green. Blue is the iSpy at 2.37% appreciation over the last year, and in green we have the IQQQ at 2.97 price appreciation. Now, price-wise, their movements are very similar. Now, when you look at the total return, this is where it kind of changes a bit. All of a sudden, we have both of the NEOS funds out overperforming. So my overall flavor here going forward is I do enjoy and prefer NEOS, but I wanted to take that short tax loss in end of 2025. So here we have the SPYI had total return at 15.86, the QQQI at 17.07, and then ProShares came out a little bit less, right? ProShares SPY was 12.39, and the ProShares NASDAQ IQQQ came out at 15.65. So their performance is very similar in price appreciation, but where the NEO stands out is that yield. Now, if we take a look at their yield, let's go ahead and bring in just the yield itself. That's where the big changes are. So ProShares iSpy is a yield of 8.54. So there's less covered call income being generated here and paid out to the shareholders. The IQQQ is at 10.36. So these are much lower than here we have SPYI at yield of 11.69 and the QQQI at 13.85. So the way that they're able to ladder their call options and put options and such for the NEOs, they manage it much better. Well, they're able to produce higher income and a higher return with that. So overall, going into February, I will be transitioning back to the NEOS funds, but temporarily in order to continue to keep my tax loss here on those for 2025, I'm going to be rolling into the iSpy and IQQQ. Now, gonna go back in here, we can see that my current plan going into allocation wise, I also wanted to diversify a bit. I've been pretty heavy with SPYI and QQQI, but I wanted to diversify a bit going into the Russell 2000 using NEOS IWMI and also gold, precious metals with IAUI. That is the NEOS gold investment and the NEOS Russell 2000. And we'll cover these here in just a minute. As far as their yields go, they're pretty good. Actually, we can talk about those now because I have them right here. We can see their dividend yields if they pop up. This is not showing correctly for the NEOS Gold High Income. So this is around 11 point some percent, but we can see that NEOS Russell 2000 is at 13.94. And NEOS has been underperforming in recent years with lower interest rates kind of happening here, kind of going forward, and a few other changes out there in the market. We could see the Russell 2000 begin to pick up. I wanted to diversify a percentage of my future allocations for these. I would still retain a high yield by being blended between these four funds. We can see here that they would have an average around 12 to 13%-ish. This one's actually in that 11.69 range. So here, when we took that tax loss harvest and we sold SPYI and QQQI, we locked in 319. If we had stayed in, as I said, we would have been at 317,464. So here, 317,464, the QQQI and SPYI would be, because of the sale, we lost $3,390 in dividend income right now. Now, we also created that buffer. So that buffer, if we were to rebuy these shares, we would wash out the sale. We would rebuy more shares, increase in our upcoming dividends, but I wouldn't be able to tax loss the losses that took place here at the end of 2025 against the gains that I've had happen. Now, going into 2026 here in January, we have $323,000 or so. Let's go ahead and take a look here. $323,043.97 with the SPACs that was paid out recently, along with the cashback that we're going to have rolled into the account that is ready to be reinvested. So these are not absolute where I want to throw cash, invest cash, but we can see here the NEOS High Gold Income as at 11.76, the NEOS Russell 2000 as at a 13.95, And then these right here, the IQQQ and the SPYI are much lower. The SPYI is at 8.32 and the IQQQ is at 9.91. So I'm going to have to adjust this a little bit before I make the, pull the trigger here in upcoming week. But I do want to diversify between gold and the Russell 2000, and then eventually I'll be transitioning these back over into the NEOS funds. So you can see here that are based on what I've entered at the moment. Our upcoming dividends would drop from $3,300 down to about $3,000. I'm not including the BTCI. That's already there and I already own it. So I'm not including that in my the distributions on a monthly basis or yearly basis. So that's just in there automatically. I'm not talking about that right now. But yeah, these funds here, we're going to go ahead and drop down from a 12.81 temporarily to 11.38. Now in February, we'll do another adjustment, and I'm sure we'll see as these kind of get reallocated and I finally get a good position on where I want them long term. We'll see this adjust back up with a higher income being generated, but this is all to be decided on what exactly takes place here on Monday. Because of what has taken place with the Venezuela, we are seeing after hours that there's a lot of positiveness in the market due to the precious metals potentially and oil. We saw oil futures beginning to pop up higher. We see the S&P, the Dow Jones, and the Nasdaq all moving higher here pre-market. Yeah, Dow Jones was essentially flat. S&P was flat earlier. The Nasdaq was below 0.3. We're seeing a pre-market kind of floating higher, but volume is low. So we won't know until market opens if this holds and we break back above. So right now we've created a buffer after hours on Friday. The SPY actually fallen around 0.10%. And on open, we might see the SPY kind of pop higher on, people being happy. But then market sentiment may change going forward. We've seen a lot of news outlets suggesting a lot of different movements. So we might see SPYI come back down, retouch 680, 679, that gap that was filled, and see if we go ahead and hold or if we continue to move upside. If we go ahead and continue to move up, I will be putting in some buy orders on Monday morning and capturing the way up. And then going forward as we get into February, then I'll go ahead and reallocate my portfolio better. But I wanted to create a quick update going over some of the tax loss harvesting that took place here in December 2025, as well as my budget update going into January 2026. 2026. January budget update and some changes for tax loss harvesting that was taken back in 2025. So I think that's going to be it for today's video. If you guys have any comments, questions on anything that was discussed, let me know down in the comment section below. Do you think it was great to take some tax loss harvesting, create a buffer there of around $2,500 and potentially more if Monday ends up deteriorating and the market continues to sell off and we fall down into that 370 price because we want to refill this gap that took place? Let me know down in the comments section what your thoughts are. Also, if you guys have not joined the Discord server, go ahead and check out the pinned comment down below. You guys can join the Discord server. It's completely free, and there's also some other goodies down there as well. And that is it for today's video. I do appreciate everyone tuning in and hanging out. If you guys did enjoy the video, be sure to go down below and hit that subscribe button and smash that thumbs up. Would really appreciate it. And I will catch you guys in the next one. Bye-bye.